introduce him before the audience. Mr. Venkatraman started his practice in the year 1989 under Mr. C. Natarajan, senior advocate, worked under him for 14 years. In June 2003, Mr. Venkatraman started independent practice and formed a legal firm, namely VMJ Associates, who is also a member of the Madras Chamber. He was designated senior in the year 2006. Mr. Venkatraman has completed 28 glorious years of professional practice in the fields of indirect taxes, direct taxes, international taxation, transfer pricing, corporate taxation, competition law, and TROI, etc. Besides the Honorable Supreme Court, Mr. Venkatraman is appearing before 23 high courts spread over various states, taxation tribunals, advanced ruling authorities, SEBI, Securities Appellate Tribunal, and other forums. He is also serving as a legal counsel for the major international accounting firms in India. Speaks regularly at the National Judicial Academy, chambers including MCCI. He is a regular address speaker for the All India Workshop on Direct Tax Laws organized by Madras Chamber every year, and Sastra University and other associations. Apart from his legal profession, he involved very much in the Anmigam and religious activities. He is one of the prime Shishya of follower of Shinkari Acharya. With his holiness, blessings and guidance, Mr. Venkatraman started a Veda Padashala at his mother's village, Mail Mangalam in Thani district. The Veda Padashala is 11 years old and currently has a strength of 60 students and 4 teachers. Drops out or 0. Students leave the Padashala only after undergoing the full course. He has been blessed by the Acharya to construct and run a temple in the name of goddess Bala Tripura Suntari, their family deity, at his father's village, Kodimangalam, Madura district. Over to you, sir.
माला सुधा कुंभ विबोध मुद्रां विद्याविराजत करवारि जातां अपार कारुण्य सुधांबुराशिं श्री शारदांबां प्रणतोस्मि नित्यम्. Dearest Madras Chamber, dear Ram, and my lovely, lovely well-wishers, what more can I say? To see you all on a Saturday morning at 9 o'clock. I've said this several times and I'll say it one more. For a Carnatic musician, wherever he performs across the globe just doesn't matter. His performance in Chennai matters the most to him. So, for me, wherever I speak doesn't matter. Madras Chamber matters the most to me. It's the closest to my heart. And we have all grown through them, and I'm very, very grateful for this opportunity. A lot of action has happened in the last 2 years, which requires a lot of deliberations. Before I step into address, I offer my pranams to my spiritual guru, the Saint of Shringeri, my professional guru, Mr. C. Natarajan, but for whom I would not have been whatever I am today. And I need to mention 3 more people who have taken me up in professional life. 2 of them are here, and therefore I need to mention Mr. Ranganathan of Ernst & Young. He was the one who introduced me to the Big Four in 2004. The marriage between a lawyer and an accounting firm was an experiment he did for the first time in India, and he trusted it, and that's something which I can't forget. It took me to different courts across the country. The first 14 years, I had been a shadow to my senior, and the last 16 years, I can say, hi Vadi, thanks a lot, please. Good management sometime. Thank you. Last 16 years, I have been growing through the help of Mr. A. Vijay Raghavan, who is touching 80 in June. He is the center pillar on our thought process. the last 2-3 years, there is a way, there is a mechanism, there is an art to open up the GST law. That's the essence, which I will drive home in the course of the talk. It's not like any other legislation. You will find answers to most of the questions, but you must know how to open it, how to dissect it, and how to combine it. I will cite 2 examples which required an examination of over 16 sections and rules before we could conclude something as an opinion. So this matrix requires to be mastered, one has to be very efficient in that. At 80, this gentleman has mastered that art. I have to say that I had the richest, I have the closest to proximity, 24/7 with him. And the kind of combinations he brings out is amazing. Thank you for all the help you have been doing to me, sir. The last 1.5 years, I've also been learning from one Mr. Aziz. He's again a 78-year-old gentleman in Kerala, a retired joint commissioner, an advocate now, who has been briefing Additional Solicitor General when he was in Revenue Service. And absolutely, see, these are all talent at this age, working somewhere, a latest law. That's why I'm bringing them to fore. They're all very old people. This time for them to spend time with grandchildren or any. They stick to these books. They keep unraveling what are the possible combinations and permutations one can make. He's again a 78-year-old man, and his idea and his views and perspectives about GST is quite astonishing, quite astonishing. So it is grace of God that I had the benefit of interacting with such people, and because of which we are able to share a few perspectives which may look new and which may look in some cases as conservative, and in some cases as potential possible solutions also. It's a wonderful law. Yeah, there are, in fact, Ram has put it beautifully. I would say, I mean, you should be introducing any speech, sir. You'll set the trend. So beautifully, he's combined the 3 cases to say how meat, liquor and lottery are, where are our priorities? Law also gets intoxicated. And law should get intoxicated like a human being, because you need to deal with it carefully. So these extreme views will ultimately need not necessarily be the template for the GST law as it progresses. Before I start the intrinsic case laws which I wish to discuss, I thought I should place this aspect very clearly to all of you. Somehow, in spite of irreconcilable political differences, we have passed this law. That's an amazing, it has shown that we are a very matured and evolving democracy. We have shown to the world what is cooperative federalism is. So they have done their job. And for the last 2 years, the council has been working 100 out of 100 in the sense any recommendation has seen it as unanimous, without dissent. Of course, these are the honeymoon periods, so we'll need to watch how it progresses. But it does send a clear message that even at an executive level, when I say executive at a minister's level, at a governmental level, they understand that we can't be taking the trade for a ride. And we need to reconcile. Even we may have differences elsewhere, we need to cut our edges elsewhere and not through the GST Council. So this experiment has fairly worked well these last 2 years. In fact, in one of the sessions when I was addressing at the National Judicial Academy, last year we did 6 sessions, some on GST and some on Constitution, to learned judges of various high courts. One of the concepts which we were discussing was this. It's very interesting when it comes to GST. GST Council is a constitutional body, no doubt about it. But it's a body comprising of the union finance ministers and the finance ministers of the various states. And if you see Article 379 capital A, it prescribes the host of items which they can recommend, most of which are legislative in character, including rates, concessions, etc. Therefore, the classical thinkers of the Constitution feels that how can a legislative function be delegated to the executive wing? And therefore, this is excessive delegation, and therefore it interferes with the basic structure of the Constitution. And therefore, this is bad. Why do they say so? After it gets recommended, then it becomes as notifications under the CGST and under the SGST and wherever necessary under the IGST. These are not tabled in the respective houses. If you start tabling it, you will never see them to light. So this has been taken away. And therefore they say, when there is no parliamentary supervision or state supervision, you are leaving it to the hands of the executive, and therefore this is hitting the basic structure. So I had the opportunity, this is a very interesting dimension which classical thinkers promote. But we have to now align ourselves with modern views and allow things to happen. We can't, this is working, and if GST Council breaks, GST law will break. So I had a chance to talk to a professor in a Pune University when I went there to address some of the meetings. So he was showing some interest on GST and Constitution, and therefore I sat with him. He brings out a beautiful doctrine which is there in many federal countries. He says there is something called pooled sovereignty. That's a mechanism where legislative or functions done by the parliaments and the legislatures are indeed performed by the ministers. And it has the mandate and sanction in the new dispensations of various countries. So, like cooperative federalism is an important milestone we have achieved through GST, pooled sovereignty is going to be one new dimension which will come up in the years to come. In fact, we have been pleading to the judges every time we speak in the National Judicial Academy that now the ball is in your court to actually allow the law to sustain or to break. If any of the courts decide to be parochially patriotic to their state, it will have an impact on GST. If anyone tries to say that this is an excessive delegation and therefore GST Council cannot do all these things, it will be a death knell to the GST law. So this pool sovereignty doctrine needs to be encouraged, needs to be promoted, so that this experiment, in fact, we've been telling them in the academy that this experiment needs to actually expand to other areas. When we can successfully run a cooperative federalism in GST, we should try it in environment. See, there are two major areas concerning states and union. One is river water disputes. Another is the environmental issues, forest. So these are all areas which we should keep expanding hereafter. This trial is working well, so whether we can do, the footprint should be followed to what best extent possible. So this is the basic structure in which we need to now examine how this law is progressing. There is one downside which I should put it straight away, and therefore chambers should write to the GST Council for a course correction. When politicians have done their job and GST Council is doing its job, now we are making one mistake in the law in creating the same wooden structure of a litigation for policy, litigation forum in the GST law, assistant commissioner, commissioner, tribunal, high court. This is simply disastrous. The kinds of rulings, some 400 rulings have so far come through the advanced ruling authority in all the 20 states. I mean, out of 30, some 17, 18 states have done it. Now they have recently issued the notification on 13th March appointing the GSTAT, first tribunal coming up in Delhi, which will deal with place of supply, which advanced ruling authorities cannot deal it. So place of supply now, which was silent all these 2 years, will now start shaking up, and issues connected to place of supply will now start coming up for consideration. The plan is to have 4 such tribunals in India, besides state tribunals in all the states. We should avoid this multiplicity. The reason is simple. Of course, income tax has the same structure in spite of being a parliamentary law, is what you will say. But after all, we are now evolving a mechanism for litigation. When you have a uniform law, You don't have to multiply the litigation system in all the states. You should shrink it to few centers where you can invite members from all the states. Let there be that federalistic participation. We need not deny that. So when Karnataka problem comes, let him sit in the forum and then take a call. Absolutely no problem. But you can't have 30 forums. You have now 30 AARs, and the result is 105 out of 100 cases gets decided against. It's becoming vexatious already. So this has to stop. This is something which we need to take it seriously to the council, and they are in a position to listen today. So we should bring them a proper solution policy for litigation. This is one. The second important aspect which we should try to suggest to them is, if you have identical show cause notice across the country, today auto industries is likely to receive close to 700 show cause notices on one issue. Across India, they are now working on this. 700 notices are likely to be issued shortly on an auto industry on a valuation problem. But the point is, you can't have 35 forums deciding it anymore. It's simply not going to work. So wherever issues are the same, you should allow them to be bunched. And today, anybody can travel anywhere to argue, and clients are not going to say, no, I won't sponsor your travel. It's not, all those days are all gone now. So you should and if there are collective issues, this process of 3 forums should be clearly avoided. You should pitch it in the tribunal. When we can pitch our replies in the AAR, we can do that in the tribunal too. The tribunal should be the first forum to declare the law. And the third improvement which we should try to try with the council is, let there be some sort of a body which has representatives across, including specific trade representatives, along with executive, so that wherever they can take a call or a national position, because today if somebody says you pay and we'll give you credit, I think assessees are not going to say we will not pay. That era is gone. So you allow a litigation to spoon up for 10 long years, it's not worth it anymore. Nobody wants it. So if you have a body, if you have only a tax body, then it issues circulars in its own way. For the first time I'm seeing in GST, they were ready to clarify that TCS, which they originally said is liable to GST, now they have issued a clarification, TCS is not liable to GST. And while saying so, they keep justifying as though their original position is right, even though finally it says it is not taxable. So these things can be ironed out at this stage. So these are 3 important measures which I think we should take it up to the council to ensure that litigation on GST gets streamlined. Now, this is at the policy level. Now, coming to the various issues which is cropping up, I will take first 2 important judgments. One rendered by the Honorable Supreme Court in October 2018, Mohit Minerals case, which Ram was also suggesting. Why you keep slapping cesses again and again, even under the GST regime? Constitutionally, it has been upheld by the Supreme Court. And one recent judgment of the Kerala High Court on how this stillborn entry 54 of list 2, has it been annihilated once and for all? If so, what are its implications of the pending VAT assessments across the country? These are 2 important constitutional issues. One is interconnected with the other. And therefore, I will take both these case laws first to discuss what they actually mean. In the case of Mohit Minerals, this was the issue. If you see the original, Supreme Court records all the facts very neatly and very systematically. At the bill stage, not at the act, 101 is an amendment act. When it was a bill, there were 2 sections in the bill, section 18 and 19, which recommended 1% IGST, interstate, as a compensation, and 19 suggested that wherever required, compensation cess can be levied. Compensatory taxes can be levied. When it became an act, 1% IGST got removed because of political alignments, which all we know, it was a hot debate at that point of time. And therefore it was withdrawn, and 19 became 18. Now, 18 says Parliament is empowered to collect taxes towards compensation or cesses towards compensation. Using that section 18, they brought a legislation in 2018, the State Compensation Act, and the State Compensation Rules. This is a central enactment passed by the Parliament. And they imposed cess on a list of products. One was coal. Coal under the service tax regime was, or under the earlier regime, was suffering the clean energy cess. So some assessees had stocks on 36. So the question initially was, what happens to those stocks which are retained even now? Should they suffer a new compensation cess? It started with that, but they gradually improved itself to a constitutional validity. So Delhi High Court interfered with an interim order and said that if you have paid clean energy cess, you don't have to pay the state compensation for those items. That was an interim order it gave. So revenue went on an appeal to the Supreme Court, and the matter was argued finally, and a final decision was pronounced. Now, what does the final view say? It says the following. It cites Section 18 of the Constitutional 101 Amendment Act, saying that it empowers Parliament to impose compensatory taxes. That source is being ceded in this process. So they have the power. Because you can test constitutional validity first with competence. So do they have competence? They said Parliament has the competence to do this. Now, second improvement they made was they referred to Article 270 of the Constitution, which deals with distribution of the taxes collected and powers in short. And one of the expression in Article 270, even though they have subsumed cess into GST in its original format, somehow Article 270 still retains the word cess there, along with taxes. So, Supreme Court said, expression cess is found in Article 270. Therefore, Parliament is competent to impose cess because it is traceable to Article 270, independent of Article 246 capital A. Now, this far there is no problem. We are okay. Because this is some unique levy which will stay for 5 years. And it will go after 5 years is what we anticipate. So you have created a power because, see, when you have to convert 60, 70 years of law, which was origin-based to destination-based, so manufacturing states were opposing this. 6 manufacturing states, including Tamil Nadu and Maharashtra, were opposing that. Why should you change to destination-based? But unless the law becomes destination-based, you can't subsume the credit mechanism. You can't allow credit on capital goods. Nothing will work. So you need to make the law destination-based. Only then it can be vibrant. And historically, it has been proved that once a law becomes destination-based, then growth happens across the place. That's one of the economic reasons given for making a tax a destination-based tax. So, this conversion, there was a promise in the various committees that we shall compensate you for the losses incurred for 5 years. Therefore, how do you recover the loss? You can't pay it out to the GST, so you take it out in the form of a cess. So when you impose the cess, question was, you have given a national commitment, one tax, one nation. Now you are bringing something else. That was the challenge before the court. Court said, it remains still one tax, one nation. This is something under Article 270, therefore they are entitled to. If they have stopped with that, then there is no concern. Now they nuance it to the next stage. The third principle the judgment seeks to evolve is, it says, well, 246 capital A is a source of power in a constitution. Because source of power both for the Parliament and state, and the field of power is also embedded in the article, goods and service tax. 246A is a tax on goods and services, undoubtedly. But 246A nowhere excludes expressly the imposition of any other tax. My God, that's a reach. That is something which they need not have said for this case. They could have sustained it under Article 270 and stopped it there. So now Supreme Court judgment says 246 doesn't exclude any levy other than GST. How do we read the field of power that way in a constitutional document? And today, and therefore, they are indirectly tracing cess to 246A also in addition to 270. This is one area of concern. I think this needs to be revisited in the larger interest of sustain. Of course, they say that with this reason, it applies only to Parliament. States cannot do it. To that extent, we are safe. Because Parliament has a residual power under Entry 97 List 1, which states do not have. So cess has always been under contest. Where is the source of power? Show me the field. They have always traced it to Entry 97. So it says Entry 97 List 1 enables you to impose cess by the Parliament. Therefore, read that also in 246A. So what does it mean today? If Parliament chooses to impose any additional levy over and above GST, it can do so deriving power under Entry 97 List 1 read with 246A. That's the law today under Article 141. So is this a good trend? We'll have to wait and see. Now, the judgment also declares two more principles. It was contested, saying that I have paid clean energy cess, now you are asking me to pay something else. I have paid GST on the goods. Why are you asking me to pay cess? So they should be mutually exclusive. That was overruled and rightly overruled. In India, we follow the Kennedy and Lofroy's theory, Federation Hotels case, wherein Supreme Court has said, as long as there are multiple aspects for the same levy, you can sustain multiple levies for the same transaction. Therefore, one field is this 270 through cess, another field is goods and service tax, and therefore both are sustainable, applying the aspect doctrine. And the final point that was contested was, all right, we have paid, give us credit, there is no credit mechanism. That has also been overruled by the Supreme Court, saying it's a matter of policy. We can't, through a judgment, allow passing of SENVAT credit or ITC credit, as the case may be. So these are 5 important first foundational principles coming out of a Supreme Court judgment in GST in these 2 years. This is the first leading judgment of the Supreme Court in this Mohit Minerals case. And some articles have come out. Chartered accountants have written beautiful articles. In fact, they have touched on the nuances of Constitution. I read one, my junior sent me yesterday one. It was a very good article. So people are now, well, lot of academic, that's something sound. You are now, you may not have a very standard book in 2 years' time. It is very difficult. There are many books which puts a lot of information. It connects you with a lot of information. But a lot of people are writing about GST. And you can find a lot of perspectives being slowly. In fact, a chartered accountant has discussed when Section 18 of the 101 Amendment Act is only in the 101 Act and not forming part of the Constitution, is Section 18 enforceable? And he traces 3 Supreme Court judgments to say even though it is not written into the Constitution, it is still part of the constitutional scheme, and therefore Section 18 is valid. It's so nice to read a professional, neutral idea relying on Supreme Court judgment, bringing out those principles. So this is how GST is evolving. Nariya per padigiranga. We should understand that. And a lot of people are trying to put their idea. Of course, if you collect 1,000 articles, maybe only 20, 25 may strike well. But you must know to connect it. That's very, very, in BEPS you see, you will have 10,000, at least 1 million pages. Ranganan sir will be able to validate it. So much. But in which 1% will be extraordinary content. You should know to discern that 1% if you want to be thorough in BEPS. This is now very, very important because there are some lawyers and consultants also in the forum. It's my duty to point out how to acclimatize yourself with GST law. These are all ways and means to understand what is happening around. This is one judgment. Now, the second judgment is the Kerala High Court judgment, in which, of course, I argued it along with other senior counsels. We have now, yesterday, we moved it before the bench, and bench has admitted the matter, saying that it is indeed an arguable case, and they have fixed it for final hearing on May 27th, 28th, and 29th. 3 days. Now, what is this issue? It's very interesting. If you see this 101 Amendment Act, there are two sections, Section 17 and Section 19. Through Section 17, they have amended constitutional entries in List 1 and in List 2. For example, see, other than customs, rest is all subsumed into GST today. So, what happens to entry 84 List 1 excise duty? If you go today and see the schedule under List 1 entry 84, you will find only 6 items: petroleum, aviation, tobacco, etc., etc. Of course, alcoholic liquor for human consumption is with state excise, so you will not find it in entry 84. Rest is all subsumed in GST 246A. So that amendment is there. Entry 92 goes, entry 92C goes. Now you come to state list. Entry 54 becomes an abridged version now. Original entry 54 list 2 empowered states to impose sales tax, subsequently VAT. That is the constitutional. How do you legislate? How does a state, see, this point is this. Where do you have the right to legislate? 1. Who is to legislate? 2. These 2 is traceable to Article 245 and 246 of the Constitution. It tells who can legislate on what. And the fields of legislation, List 1, List 2, List 3 are the 3 fields. So entry 54, List 2 empowered the states to impose VAT. Now go and see entry 54 today, post 1/7/2017. It says, identifies only 7 items. These 6 items which is there in excise schedule, plus alcoholic liquor for human consumption. These are all, why? Because petroleum products and alcohol and tobacco gives the largest revenue. So you must give time for the states to migrate. The sunset period appears to be 2021, before which all will come into GST. That's the understanding we have. So entry 54 has been shrunk. Entry 52, entry tax, gone, completely omitted. Now, entry 19 says, the section 19 of that 101 Amendment Act says this. It says, we have made all these amendments through 17. We will save them for 1 year. 101 Amendment Act came on 16th September 2016. That's the date. It said, we will retain its life for 1 year. That is 15/9/2017. So up to 15/9/2017, entry 54 will be in its original shape and form in the Constitution. It is saved, protected. But should center or state pass the GST legislation, then that day will become the relevant date for exhuming this. So respective enactments will annihilate these entries. So for example, in Kerala, the ordinance got passed on 22nd June 2017. So post 22nd June 2017, there is no entry 54 in the Constitution in its original form, tax on the sale and purchase of goods. That's no longer there. It is shrunk to these 7 items. So we moved writ petitions in Kerala first, challenging, saying this: any notice issued prior or subsequent to 22nd June 2017, any assessments passed prior or subsequent to 22nd June 2017, and where recoveries have not been made for assessments passed prior to and post, you cannot touch it. Because there is no entry in entry 54 list 2 at all. That entry has not been saved in the Constitution anymore. It's gone. Even though all the legislations, including CGST, section 174, there is a repeal and saving clause in all these legislations. So you have the state GST law saving all the past assessments, appeals, pendings, penalties, fines, etc., etc., like any other saving and repeal clause. It saved it. But you have not saved the entry in the Constitution, which is the mother or the source of power. That was the dispute. So we said, this saving clause is a stillborn legislation. It has no efficacy, no legal sanctity, because you have not saved entry 54. So any VAT assessment for the past is dead and gone. Today, 5 high courts have granted a stay. Karnataka, Andhra, Kerala, Uttarakhand, and Gujarat. In all the 5 states, we have got a stay, including for entry 52 on this point. Now, Kerala learned single judge heard the matter and passed a very detailed judgment, 135 pages, and it was a delight to argue before that learned judge. It was a delight. He was so strong in constitution and very passionate about law. He has done his own research, which is part of the judgment. Now, we argued 5 points. Very simple 5 points. We said, 1, Article 265 says levy and collection has to be under authority of law. So 8 Supreme Court judgments have said, constitutional benches, levy and collection would mean levy, assessment, collection. So even at the point of collection, there must be authority. So wherever you have not recovered taxes, you don't have authority because entry 54 is not there in the book. So first point. The second point we argued was, we showed 3 articles from the Constitution, Article 367, 372 and 395. These are all saving and repeal provisions of the Constitution. 395 repealed certain acts which was prior to Constitution, like the Independence Act. See, the Government of India Act 1935 was the governing law before we had the Constitution. It was repealed. 372 gave the President the powers to hold such law which has not been repealed to be saved. And 367 allowed interpretation of those laws using the General Clauses Act. So we said there is a design in the Constitution. How to save, how to repeal, and how to interpret. That doesn't figure under this for entry 54, so you can't tax it. Third, we referred on the 40th Law Commission report, which interpreted 367 as applicable only for old legislations. Fourth, General Clauses Act don't apply for temporary statutes. It applies only for permanent statutes. You have a sunset clause in section 19, which gives a life of only 1 year for entry 54. Once there is a sunset clause, General Clauses Act cannot save it beyond that period. So all these aspects, the learned judge agreed in his judgment. So it's like a case where operation success, patient died still. Finally, he held it against us on one principle. He says that notwithstanding all these points, you are saying it has not been saved or repealed. Please see Article 246 capital A. It's a source of power on goods and service tax. So you can impose goods and service tax. You see the definition under the Constitution for goods and service tax. Article 366 12A, goods and service tax means a tax on supply. Go to section 7, the charging section. Supply is defined. Supply includes transfer of goods by way of sale. So, because supply of goods is by way of transfer of sale can be taxed, you can tax. The source of power is retained in a form under Article 246A. You don't need entry 54 at all. So the matter was heard yesterday by the division bench for 1 hour and 45 minutes. It came before a very good judge. He said, even though I'm not a tax judge, I would like to know this. So he heard it for admission for 1 hour and 45 minutes, and he admitted it after a pre-deposit of 20%. He says, so what we argued was simple. We only put one case, one point. If you say 246A is the source of power, this source of power has come into the Constitution only on 1/7. How can it save something prior to that period? Number one. Number 2, transfer of goods, it says as a part of supply. Transfer of goods as a supply under GST is the source of power, not under VAT. And 3, if this can be read into 246A, then why do you restrict 6 items of entry 54 there? You can as well bring it under GST and say, yeah, annihilate entry 54 once and for all. You still retain entry 54 in some form. And it is still VAT. Those entries are governed by the old VAT Act. So how do you balance these two quotients? So this is a major constitutional issue which is proving up. So the easier way would be to amend the constitution, but it is not easy. Because you need to again take consent from half of the states on this. So GST passed like a whisker, but whether these amendments will pass through, we don't know. But Kerala has been prudent. The government has come forward with therefore an amnesty scheme. They have said before 30th June, if you pay the taxes, entire penalty and entire interest is gone. So that's an attractive offer. We showed that to the court to say we'll make a pre-deposit adjustable under the amnesty scheme. That's the order we have got it yesterday. Because clients, ultimately we have to give proper advice to the client. How far you will debate and how far we will succeed, we don't know. But these are two major constitutional issues which has come up for consideration in these 2 years in the GST law. Now we'll come to far less mundane issue. The most important issue I thought I should address is the liquidated damages. That's something which is becoming an issue everywhere. And you already have a host of judgments discussing that it is taxable. What do you mean by liquidated damages? See, it can happen in multiple ways. I will give you 2 examples. One such case was before the Maharashtra AAR. In that case, the contractor and the employer entered into a contract wherein he agreed that if I perform at this level, you can withhold this much of my payment. If I don't bring so much of people and then do my work and deliverables are not done within this, you can deduct this. So, his inefficiency, his incompetence was forming part of the contract. And the contracting parties agreed that your inefficiency will be penalized in the following structure. Question is whether this is a case tolerating that inefficiency, tolerating an act. Is it tolerance of an act? In my humble opinion, it is tolerance of an act. Because the contracting parties don't call this as a liquidated damages. Liquidated damages normally is for terminating a contract, not for continuing a contract, normally. If you see the contract also, it talks about there are judgments in 64, 63 of the Contracts Act dealing with these matters. And English contract law, if you read it also, they are all tracing the origin of all this is more for termination, to get an exit. It's loss of work, loss of business. That is exactly what liquidated damages all. Whereas these people tried it under that theory. To say that this is nothing but a character and color of liquidated damages, you can't therefore tax it as, it was rejected. And in my humble view, rightly rejected. Now you have therefore a contrasting case, which this case has been applied there, which we had an occasion to argue before that authority. Now, this was a case where you agree for a job to be performed, a turnkey job to be performed over a period of time. So bills of materials are agreed, time schedules are agreed, payment schedules are agreed, and there is an LD clause, which says, if you default, if I default in my payments, these are the progressive, if you default in your work, I will be able to exit. So if I stop paying you, you can exit. If you stop performing, I can exit. And when you exit, these are the charges which each one has to bear as liquidated damages. Now the question is whether this contract can be called as an act of tolerance. You are tolerating me to allowing me to exit, And therefore, it's an act of tolerance that liquidated damages is a consideration for GST, and that compensation should be understood as a consideration liable to tax. So we place the following arguments. A, first of all, this is not a service to constitute as a supply. It is a disservice. See, act of tolerance is what? Competition. I will not compete with you for 5 years. You pay me a consideration for that. I buy. Somebody is a competitor. You buy a brand, saying that this brand, I can use it exclusively for 10 years. After 10 years, you can use it. For 10 years, you shall not compete in this brand. Act of tolerance. There he is actually rendering a service to the other man by disabling himself from using that brand. Now, in a contract of default, where do you generate a service? That is the first question we asked. Second, if you say it is service, where do you get the consideration for that service? This is a compensation for deficiency, a compensation for failure to perform. You don't perform and therefore you compensate. How does this become contractually a consideration? 3, we showed 2 rulings, one by the Australian Tax Office and another by the UK VAT Tribunal, where they have said, because this very word, Tolerate Act, is all there imported from the UK law, where they have interpreted this term and says, loss of business, loss of work, loss of employment cannot be construed as a supply. And the compensation paid cannot be construed as a consideration. Now, what does the AER do? It does not consider it at all. Simple. Problem is solved. It records all this for 15 pages and 3 passages. However, we consider this to be an act of tolerance. You need to really tolerate and file a further appeal. We have to be very careful. I think we should trigger a proper representation to the council, suggesting a proper litigation policy from our end, for whatever it's worth, from the chamber, not from individuals or from. I thought as professionals we should write it. I thought we should go through a chamber.
I think council is required for professionals not to go to AAR.
True. But see, many of them go to AAR to get a validation it is taxable so that they collect it from the customer. My general suggestion to all of you, if you can pass ITC, don't carry headache. You should now do business. See, there is a strong opposition to GST from some quarters saying there is harassment, there is arrest, all this is happening. So this is one more. Please see who have they arrested. Please see who are they harassing the last 1 year. See, the reports say in this last 1 year, they have found out fraud to the extent of 20,000 crores. And the member says, we have recovered 10,000 crores. And what is this fraud? Only circular trading, bogus and fake invoices cases. You will have, see, in those days, we do 3M case, 1.5 threshold limitation. 1.5 crores up to that, 2 crores up to that. So first you will start one with the man, husband, second with wife, third with son, third for daughter-in-law, son-in-law. So after all that is completed, the fellow will come for advice. Sir, my quota of 6-7 is over. So what do I do next? So what me Vaidhi will all advise? Start the process again, marry. So all these things can't work now. Just can't work. So it is these people who are caught. It is these people who are harassed and then arrested, including a chartered accountant in Meerut. That's what paper report says. So you do circular trading. What is circular trading? it will be just 100 rupee transaction. 100 will become 110 in the hands of B. 110 will become 120 C. 120, 150 to D. 120 to 200 to D. One transaction, only invoices will keep moving, and all the 5 fellows would have taken bank loan. So these are all the issues which is cropping up, because today you have a system in which you can crack it down. So you can't say that they come and I'm just asking you, are they coming every day to harass you? No, I don't think it's happening. Where there is fraud, they are not leaving it, and they should not leave it. The extreme punitive action should be recommended so that things fall into place. Now the third issue I thought I should flag upon is this Columbia Asia Hospital case. It deals with two important issues, two very, very important issues, and it has been interpreted, one possibly correctly and another definitely wrong. So what is that? What are the two issues which came up for consideration? Now, section 25(4) says, if you have same company, if it has different establishments in different states, each will be considered as a distinct person. Fair enough. Why are they saying? Because it's a federal setup, every state has a right to tax. And therefore, they are right in saying that. Now, Schedule 1 says, any transaction between an employer and employee will not be considered as a supply. And very importantly, recently on February 2019, they have added one more explanation to 25(4), saying that if taxes cannot be recovered from one distinct entity in one state, you can go and snatch their bank account elsewhere. So, at least the post-2019 amendment validates our thinking. You are treating them as one single entity for recovery. Then what is your challenge in not treating the employer and employee of these entities as one employer and one employee? What's your problem? Now the AR says, 25(4) says distinct entity, so all of you are distinct employees for the purpose of GST. So we will have to, market rate, valuation scheme, so section 31, read with rules, everything has been employed. How to assess and tax it. So they say, because you are distinct entities, employees are distinct. So you will be same employee per PF, on labor laws, every other law. But for GST, you are a distinct establishment and therefore a distinct employee. Doesn't gel. Because the expression used in Schedule 1 is employer-employee. By construing an establishment a distinct entity under 24, you don't cease to be an employee there of the employer. Because there is no contractual arrangement between that distinct entity and his employee. That doesn't happen at all. So to this extent, this is something which is concerning. Now the same judgment, different judgment for the same hospital, rendered the following rulings. What are they? It's a hospital and healthcare is exempt from GST. So what are the combinations? The patient gets admitted in the hospital. Fine. So his or her healthcare exempt. Now the catering section of the hospital gives him or her the food. Should you tax it as supply of food? Now the doctors prescribe medicines which the counter, that dispensary comes and gives it to the patient. Should you tax it? Now the AR says, as long as it is for the patient, number one, and it is done on medical advice, including the idli you eat, there must be medical advice.
Is not the right word to be used in hospital segment today.
Oh, Apriya. Oh, I'm so sorry. Oh, it considered as a white bullet, sir. Sorry. All right. Thanks for the info. So, maybe tomorrow there may be a classification dispute, classifying it as a bakery product also. We don't know. So, the ruling is today, If all this is done to the patient, then it is a composite supply and therefore not liable to tax. Even the food and the medicine stands exempt. Now the second question, what happens to the attendant who sleeps there? He is attending the patient. It's all common bill. Jagrade bill pannu inmelte. That's the message. So when you do for the attendant, whether the food he or she takes, and after all, if you stay in a hospital for 1 week, you are bound to take some medicines also to give company to the patient. So what happens to the sale of those drugs? They said, this fellow has nothing to do with healthcare. He is quite healthy. And therefore, these transactions are liable to VAT. You can't say it is a composite supply to the patient. That is super scoping. Now, third, visitors come and see that patient. And suddenly somebody gets a heart attack. Consults a doctor. Healthcare. But many come, they say, even this catering is quite good here, so we'll have some food. Liable to tax. You buy a medicine on prescription across the counter, liable to tax. So this is how you decide what is composite supply and what is non-composite supply. Interestingly, in another AAR judgment, when it comes to UPS batteries, how far-reaching. What they say, if the batteries are separate from the machine, then these batteries are capable of sale on its own, and therefore, when a battery and a machine is supplied, it's a mixed supply, not a composite supply. They concede the fact it is bundled together. See, in mixed supply, you don't have to bundle at all. If you put things together, it's mixed. They always give this example. Buy bread, buy jam, then you can have it as an independent supply or as a mixed supply if you're going to do it from the same shop. But when a hotel, when serves you food, toasted bread with jam, then it is not a mixed supply, it's a composite supply there. Because at the point of consumption, you can't disintegrate. Same product, for something it will be a mixed supply, for something else it will be a composite supply. It's a question of attending circumstances. Now they say UPS battery along with machine is a mixed supply. Why? Why not it be a composite supply? Because contractually they are bundled. That argument that it's bundled together doesn't get addressed. Once you satisfy bundling test, you won't go to mixed supply. That's the crucial test you need to pass when you have to sustain something as a composite supply. Now this is one issue which, now he was talking about duty-free shops. Well, I need to, liquor, fancy product. In fact, we have ourselves got stay in 3 high courts, I should say. But I have my own reservations about it. Now, Ashoka traders will no longer apply under the new scenario. See, both sale in the course of import and sale in the course of export, which was under Section 5 of the CST, no longer may hold water under the GST regime. It may not be right anymore. Because if you see the definitions, they have taken these two things out. They are talking, what is export of goods? Export of goods is moving goods outside the territory of India. So sale in the course of export, it's difficult to argue. Therefore, a duty-free shop, if you see the place of supply rules, the location of the duty-free shop continues to be in India. Under Ashoka traders case, because it was a warehoused goods, because of the customs provision read with 5, they said it is in an area in the course of import. It has not exited from the warehouse and therefore you cannot tax it. But now they have brought an amendment in February 2019, somewhere reinventing the wheel of this warehouse to goods again. They are saying for the purpose of high sea sale, they say as long as it is warehoused, you cannot tax it. It's still they are giving that benefit under. So to what extent we can explore it for a duty-free shop, we have to wait and see. Madhya Pradesh High Court has not examined that point. So that is as far as duty-free shop. Two more case laws, and then we move to the next section. Solar power, that's the now much talked. Solar power generators. See what happens. The solar power generator, which the machine itself occupies the maximum price, 80-90% is value of the goods is the machine. That is taxed at 5%. But if you do the installation, then it becomes a service 18%. So now, at least 5-6 rulings have come in solar. They see solar means 18%. Why? Now, the question is, how do you structure the contract? If the same vendor supplies the goods, follows it up with an erection and commissioning, then it becomes a composite supply. See, this old works contract theory you should get out of your mind. If you're going to hold works contract theory and start arguing your cases on composite and mixed supply, it's we will be neither here nor there. So works contract theory to that extent has lost its efficacy in the new regime. Whether constitutionally it is sustainable, 329A has not been deleted and all that in a given case we'll argue. But for giving advice to business, don't apply works contract law anymore, except for those items which is referred to as works contract service in the construction industry, essentially. So, if you do together, you will have to suffer 18%, even though they may be disconnected contracts. The language employed is not contract is one or integrated. Language employed is bundled for a composite supply. So if one follows the other, then what we will do? You create one more company and do the service. It's all not going to work. If the money ultimately is traceable to the same source, if the contractual obligations are going to be traceable to the same source, then you have this difficulty. So this is one area which you need to concentrate. I will nuance it a little further when it comes to turnkey EPC contracts. When it comes to turnkey EPC contracts, all of us have argued to our heart's content in all the courts, including one judgment of the Supreme Court, which says cross-fall breach cannot determine the status of the goods. What do you mean by cross-fall breach? You have a 3,000 crore contract in which 2,500 crores is machinery supply, 500 crores is installation and commissioning. Now you will have commercially a clause called cross-fall breach. A default in one contract will be considered as a default in the other contract too. You will connect them together. But we have been arguing and also succeeding in some courts. Of course, finally Larsen, Tubro, Andhra decided against us. Matter is pending in the Supreme Court. Where we have been arguing, cross-fall breach is to do more with commercial efficacy. It's a works contract which is divisible because item of machinery is identified. Sale is identified. Transfer takes place. He is withholding only 10% of my payment. Ownership transfers. But if you read carefully, the cross-fall breach says, I will hold still ownership. Because that's how they see the contract. So this came up in Andhra, in LNT, where we still argued how it only allows me to take it back on default. Transfer has already taken place. It is not a contingent transfer. He is capitalizing all these assets in his books. Somebody pays 2,500 crores. Will he wait for 5 years to capitalize it? Nobody will do it. So in a cross-fall breach, transfer of goods takes place at a different point. Inter-se obligations are different. This is how we have been arguing all our cases under the works contract regime. But this is not going to work in the GST regime. If there is a cross-fall breach, the contracts are more likely to be construed as a composite supply. Because the concept of sale followed by service, the concept, see, why I am saying the difference in works contract, it is the contracting parties to decide whether something is a works contract or something is a divisible contract. That option is always to see this building, you can enter it in 3 ways. Some say, I will sell the bricks, cement, steel separately. Then I will take up a contract to build this building. It's a divisible contract. Some can say, no, get me one price here, I'll pay you. Then it becomes an indivisible contract. Somebody, the owner may say, I will bring you cement steel stand, you come and do your sweat your labor. Then it becomes a pure labor contract. In all the three cases, the same building emerges. But contractually, first is works contract. First is divisible sale contract. Second is works contract. Third is a pure labor contract. Whereas in a scheme under GST, it is not a contractual arrangement. Whether the activity gets bundled is the essence. This is something you should be very careful about. If you want your commercial safety, then instead of 5% on solar, then you should pay 18%. So this is one, when products are at lower rate, services at higher rate, this problem can emerge. We are seeing it right through in some cases. Ocean freight. Gujarat has stayed it. We have petitions in all the courts ready. We don't know how to go and file because which court will give a stay, we're not sure. See, in ocean freight is as simple as this. See, you are sitting in India. You contract with somebody A outside India. I want these products. A contracts with B in some other territory. And B ships the goods to you on the instructions of A. B gets paid from A and you pay A. Goods reach your port. It is a CIF contract. $100 including freight and insurance. So you pay customs duty on that contract. It is a bundled supply, composite supply. Your own example for composite supply says transport is part of your contract. Good supply. Your own example. Don't go anywhere. Whereas now they say, no, this freight is an ocean freight and therefore it is liable to GST. How do you peel it out? How do you tax the same contract, same which is intrinsic of CIF, as part of supply of goods, also as service? So to that extent, I think the law needs to be revisited. I think council itself can do it. Anyhow, otherwise, let's make some fortune out of it, if possible. It's a good case to argue. So now, these are the three dimensions, roughly some broad cases of AAR. I'll take next 15 minutes of your precious time with these ideas. As I said, this law requires a mechanism, an idea how to open up and read the law. Because there are some youngsters here, some young lawyers who have also come to hear this speech. You need to be very thorough. It is not that, it's not like you can by heart logarithm book. You must know how to use the logarithm book. The figures will be there always. So it is something like this. This GST law is something like this. I'll give you one example. How you need to we navigated and finally found an answer. This relates to export by the head office to the branch office or the branch office to the head office outside the country. Services between HO and BO originally were not considered to be exports between 2017 and 2018. They were taxed. If you see the definition of export of services, inter-C BO-HO transactions will not qualify as export. They finally issued a notification in say June or September 2018 and they have now exempted it. Now what happens to those transactions prior to that? Was a question. And very huge software companies were involved in the transaction because it is major transactions happen only there. And you can imagine the kind of volumes and imagine the kind of involvement in various countries. So will they say that this is not export prior to that? Because if you see Section 2(6) of the IGST Act, which defines export of services, it clearly excludes last sixth category. It says HO-BO transaction is not export. So this was one major issue for most of the software industry, and we had a chance to work for many of them. How do you unravel? You first go to Section 7(5) or the IGST, which talks about what is interstate supply. See, interestingly today, imports and exports are interstate. They get qualified through some other mechanism. That is why you are able to impose IGST on an import of goods. How do you say? Because they say import is an interstate. And can it therefore be extraterritorial? Union law can be extraterritorial. Supreme Court has said so. As long as source is traceable to India. So, 7.5 describes this as an interstate. 2.6 of the IGST disqualifies you from. It otherwise define an interstate, subject to qualification becomes export. An interstate supply becomes an export of services provided you qualify this. And it takes out HOBO transaction. Explanation to section 8 of the IGST says, to explanation 2, that they are distinct establishments. One here and one elsewhere are distinct establishments. So it's a shut open case for the revenue is what everybody will think. What is there to interpret? One provision excludes, another says distinct, no export prior to that, no benefit were given, better pay. But IGST for the definition of supply takes you to CGST. And if you go to CGST and read the definition of supply, it takes you to Schedule 1. If you go to Schedule 1, it takes you to Section 25. If you go to Section 25, it talks about distinct entities. And distinct entities there is only for intra and inter, not for cross-border. Then you come back to Section 8 of IGST explanation 2, it is cross-border, but it applies only for IGST, not for CGST. Then you deal with persons. See, you have related person defined in Section 15, person defined in 284, person appearing in supply definition. Then you go to 121 of the section, words and phrases not defined, how to construe. If you align all these things, you get an answer. If you miss one step, if you miss one provision, there is a distinct possibility that we can end up with a wrong view. Absolutely a wrong view. So, it's like a Rubik. See, take yet another transaction. Advance payments is a common issue happening in the industry. 2, advance payment, are they liable to GST? Answer, if you say yes, then can I take ITC? Because ITC requires invoice, payment, and receipt of goods or consumption of services under Section 60. You only pay advance. Can you take credit? For which you need to read Section 9, you need to read Section 15, you need to read Section 16, you need to read Section 31, you need to read Rule 46, 47, 50, 51, provisos. If you see Section 16 says this, but it says, proviso says, if it has been paid, then you are entitled to ITC. But to say something is paid, how do you trace that it is paid? Where is the empowerment? 31. Where is the mechanism? 46. 46 says tax invoice, whereas you are giving only a receipt. Will receipt be a tax invoice for the purpose of credit? Answer is there in 50. So this is how the law works. It's very, very dynamic. Very, very dynamic. You can't take it simply at threshold to say, this is how I will view it, and a cursory look of the law, we will be able to conclude something. Not possible. Just not possible. I want to caution you on these two. Then, yeah, what are the live issues which are like last 5-6 minutes? What are the live issues which are which are now cooking everywhere? Intermediary. Intermediary is a major issue for many. See, you had Paul merchants made a distinction between a recipient of a service and a beneficiary of a service. And they said still, even serving a beneficiary will be export of service. Whereas the definition of intermediary has negated that to a great extent. And therefore today, how far Paul merchant is right law for the new dynamics. Intermediary service, revenue is slowly construing everything as an intermediary service. Even something done on a principal-to-principal basis, they somehow say that it's likely to be only agent. So lot of, and contracts have to be airtight. Your contract clauses or matters for both pure agency and intermediary, the case can survive only when you have proper contracts and proper evidence. If you don't have these two, you are going to be in trouble, certainly in trouble. Then the second issue is immovability. Immovability, transfer of business, because they say somebody somewhere, immovability means not goods and therefore it's services. Immovability under the Constitution has its own space. Under entry 49 list 2. How can it become service suddenly? So, but I mean, this is all generating itself into debates, huge debates, and the impact are quite impactful. So much of literature is available under the Constitution, and so many constitutional bench judgments that describe what is immovability. And one more thing I have to tell you, when you have to render such, there's now GST and income tax transactions go together. Many decisions in GST has an impact in income tax. So you need to have also some sort of an alignment. This is one case where something is immovable, something is given as a transfer of business. What is the difference between transfer of business and transfer of assets? Now, if you identify the prices, each item, will that transfer of business become transfer of assets? Answer is no, both in income tax and in indirect tax. Mere identification is not the test. Test is whether you are stopping that business and somebody else is doing that business. So, why they say identification is important? Identification has an impact in Section 45 of the Income Tax Act. It has a different impact under Section 50 of the Income Tax Act, 50D of the Income Tax Act. When you do the costing, in working the difference. So, same transaction, immovable, movable. Transfer of business, transfer of assets. Whether it's covered by Schedule 2 or not. Whether it is governed by 45 or 50D, what are its impact? If it is a 35 AD, you would have claimed twice the benefit. So, these are all coming up slowly. All these things are coming up at the discussion stage. Now, third important is this discount. This is a huge area. See what they are saying. This latest circular discount, that's very clear. What they are saying, I give you a discount post-sale, say 10%. So 100 rupees I sell, then you pay me 100 rupees and you reach a particular quantity. Then I discount it at 90 rupees and give you a credit note for 10. Now these people have started to interpret that 10 is a support service to him because mobilizing him sale. Where is the underlying transaction? Transaction sale or service model solunga. It is for the sale, on the sale, for achieving that quantity, you are discounted. And because a credit note of 10 rupees is issued, they say this is a service you are doing to him by selling products. Enki agency, it's a risk and reward is on my head. So then, of course, TCS was becoming an issue because they said TCS is a tax. And because it's a tax, it should be integrated with the Section 15. Overlooking the fact, Section 15 makes it clear, any tax related to goods or services. TCS is something on income tax. It has nothing to do with goods or services. Finally, they have now issued a board circular. We were planning some writs here and there. Meanwhile, they have issued the circular and stopped us from filing writs. He was talking about race club. See, lottery, fortunately, we are involved in all these matters. Therefore, I have a fairly first-hand knowledge in all this. Whether it is lottery, of course, not liquor. Lottery and race club, we have a fair idea. In race club, we have challenged it in the Madras, in the Karnataka High Court and in the Andhra Pradesh High Court and the old law. In race club, there was always a discriminatory treatment between somebody who punts through an agent and somebody who punts directly in the totalizer. Rendu Vidya Circle. Because a race club collects 100, distributes 60 rupees as prize money, incurs 15 rupees expenses, and takes a commission of say 27, 28 rupees. Whereas a fellow who trades it across the counter, he gets it or he doesn't get it, and therefore he doesn't pay. This discrimination was there always, and therefore we challenged it in the court. Now they have amended the law saying you pay on the entire 100, including the value of prize money, which is not mine even on day one. So this is as far as race club is concerned. As far as lottery is concerned, see, we have done fairly long litigation in lottery in the last 2 years. In one state, very close to our Tamil Nadu state, the state's exchequer is dependent only on lottery because it doesn't have big industry at all. The entire business is lottery. Close to 12,000 crores of revenue it gets out of lottery. So it will never allow anybody else to come into the state. If you enter as sale for lottery, you are finished there. Now, what they have done under the GST to protect such interest, you will find such laws being discriminatory also. If local lotteries are taxed at 12%, if somebody comes and sells lottery into the state, it is 28%. Who will buy? 16%. And we are all thinking lottery is a disorganized industry. They have tabled a report. Lottery collection in India is 50,000 crores business. It's not a small business, of which nearly 80% is accounted for. And it gives the largest employment. Lakhs and people are employed in the lottery business. And the final margin at 10 or 15 paisa, how they earn it is a wonderful thing to understand. So, yeah. Only source, main only source. So, this is one area. Then refund of service tax and its impact. See, somebody will ask you a question. I succeed in a refund today. Tran 1 period is over. So what will happen to my refund? Section 142(6)(a) says you will be given cash refund. There is a mechanism for that. Somebody has conceived that position in this law. So, and similarly, the difference between non-supply and non-taxable supply is very important when it comes to ITC. See, nil rate, wholly exempt, non-taxable is one basket. There are still some supplies which are not supplies under the Act. Alcoholic liquor, whether it is non-taxable or non-supply. If you see Schedule 1 items not to be considered as supply, what happens to its ITC impact? You need to navigate 3 or 4 provisions to come to the conclusion. What happens to them? A non-supply doesn't become non-taxable supply. The status is different when it comes to ITC payment. So things like that keep, of course, one more last, this Article 243N, I think many people would be doing opinions on that. Authority, public authority, panchayat, all these things. Yeah. When you do this, they have been shrinking the exemption slowly and restricting its scope slowly. It's all. So please watch all the amendments. Before you dish an opinion, you read the old Enid Blyton or the old Renan Martin, old English alone we can speak. So you have to speak modern English, read the modern Renan Martin. So these are all evolving areas. I thought I would, just 1.5 hours was indeed a pleasure to keep addressing. 1 or 2 questions, if definitely possible, we'll take it. Otherwise, whatever you feel. I loved speaking to you through MCCI and to all of you, this PET forum. And thank you, Shankar Narayan, for this opportunity. And I should please convey my thanks to my school senior, Saraswati also. And thanks, Ram, for this wonderful introductory. It was an amazing introduction. And special thanks to Vaidi for sparing your time to be here. Thank you so much, please.